Good morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, February 9th, 2021. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. In the previous session, you'll see that the previous session had a fairly narrow range, closed at 20+% of ADR, average daily range, compared to the volatility we had seen in the previous couple of weeks. Very narrow range. One thing to keep in mind is when you have a narrow range like this, there is a tendency to test both sides of the range in the following day. If price were to come down here and test the previous session's low, that could offer a trap opportunity there, a bear trap that could lead to a bullish outside day and late day strength. So right now, keep an eye on the previous session's midpoint here. That's 38.98. A failure there opens up the previous session's low. Again, that could lead to a flush of the previous day's low and a trap opportunity that leads to a push back up. Something like this back over here where price pushes below a previous session's low. Buyers come in, defend, and then you see a late day rally back up. So that's something to keep in mind here. Now we're going to continue to watch the previous week's close price of 38.85 half. Any failure to hold that level, say by the end of the day, could lead to a broader pullback the rest of the week. But right now, this market remains bullish overall. Any early morning pullback still should be defended for a reversal back up the rest of the day until proven otherwise. So keep in mind, any push through the previous session's low could offer a trap that leads to a reversal back higher the rest of the day. Here's a look at the NQ. Very similar price action. Narrow range in the previous session, again 20+% of ADR. Right now we're trading 15% of average range here in the NQ with just 47 points of range. This market's been averaging 322 points on a 10-day basis. So right now, very narrow. Again, very similar to what we talked about this pre-market report here. The range was narrow that day. If we take out the low, it could offer an opportunity to buy it back higher. So again, if we are to take out the previous session's low, that could offer a trap opportunity. Any bull trap there, or bear trap rather, could lead to a bullish move back higher into the rest of the day. So we could see a bullish outside day in that scenario. Again, this market remains bullish. Overall, we may be at a cycle high here, so if we do even pull back even a little bit deeper, say all the way into the FOMC key level below of 13.2s, that could still provide an opportunity to trap inside the bullish PIMA trigger zone for a swing move higher. On a day time frame basis, again, any takeout of the previous session's low could offer a bear trap for a reversal the rest of the day. Okay, let's take a look here at crude oil. Now, crude oil has seen a very bullish breakout. Again, this is something we've been looking for quite a while. 15-day range, you see it here. Compress, and boom, you see that thing rally into the 6-point move. We were looking for a 6-handle move at least from the low of the breakout point here. You can see that it's been 7.18 points now during this move. So from that low to the pivot high that we've seen today at 58.62, we've gotten exactly what we thought we would get. Now, the tendency of this market here lately has been to rally and go sideways, rally and go sideways, rally and go sideways. We've now seen a rally. Perhaps we're seeing a strong top here on a short time frame basis. We may see a pullback here. These ranges have been all of maybe a couple of points. So perhaps from that pivot high of 58.62, we might see, say, 2.5 handles down. That takes us to about 56s. 56s would be about here. And that would take us right into the 8-period average. Maybe we start to build some narrow range here over the next week or two before we see an attempt to go above 60. So right now we may have topped out after this breakout here. Perhaps a little bit of a pullback leads to some range-bound action. Again, any pullback as deep as 56 or even lower could still offer an opportunity to defend for bulls looking for a continuation higher towards 60 and beyond. All right, let's take a look here at gold futures. Now, gold was able to bounce in the previous couple of days here and continues to extend that as we head into the rest of the week. We were looking for a continuation toward 1848 yesterday in the pre-market video, and we've reached it here this morning, 1848. As a matter of fact, we're right at it at the moment. 1848 is the FOMC key level from January 27th, and we've also hit the previous month's close from below. So those were the targets here to start the week. based off of the extreme reversal buy signal and how bullish the early move was to begin the week yesterday, we have seen a continuation there. I also mentioned that we may see a continuation as high as 1880. But if we can't get through 1880, we might be stuck in this range. If price can't find a way to get above the previous close or find acceptance above the FOMC key level, perhaps we may start to see a lower high. So right now we've reached that early target. We may have some more upside here into about 1880, but 1880 and 1874, that remains that major overhead resistance, and until we get through that, we might be more range bound or stuck in this range between 1880 and 1780 until proven otherwise. But a very good move right now. We'll continue to watch the previous month's close here. Above that level, can open up a bit more upside. All right, that's it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.